Thank you for joining Market News with Rodney Lake. This is a regular program for the GW Investment Institute, where we talk about timely market topics. I'm Rodney Lake, the director of the GW Investment Institute. Let's get started. Welcome back to Market News with Rodney Lake. I'm your host, Rodney Lake. Today, we have a very special guest, Mr. Oscar Pulido from BlackRock. Oscar, welcome to the show. Thank you very much for being here.
Thank you, Rodney. Thanks for the invite.
All right, so a couple things. I'm just going to kick it off with a brief intro and I'd love for you to elaborate a little bit. But just some big outlines here. So Mr. Pulido is the global head of product strategy for Fundamental Equities at BlackRock, the largest asset manager in the world. Over $11 trillion of assets under management, could be even higher today with the market. And importantly, which is also a ton of fun, is the podcast host for the flagship investment podcast at BlackRock called The Bid. So I'm honored to have you here, obviously, and we've been looking forward to hosting you on the show for quite a while. One thing that I'll add in addition, and again, love to get some additional background from you, which is our connection to you, which is in 2001, you got your BBA with a concentration in finance, which is near and dear to our heart, and international business from the George Washington University School of Business. And as a reminder, before you get to go, this is a GW Investment Institute podcast, educational entertainment purposes only. Welcome, Oscar, and love to hear a little bit more about your GW connection.
Yeah, I mean, it's always great to be back on campus. I spent 4 important years of my life here. I always tell people I have a brick out in
Nice.
on campus with my name. And
do you know where it is?
It's right next to the Gelman Library.
Awesome,
so,
perfect.
It's a great spot.
Yeah,
and it remains there. I always sort of wondered, will it get moved one day? But look, I had a great experience at GW at the business school. I met my wife at GW. So
wonderful, even better.
It's a great part of my personal story. But I've obviously then transitioned into a professional career and moving into asset management. That was sort of intentional, right? To go into finance, to go into asset management, to work in kind of client marketing and product related roles. But one thing I did not plan on, I don't know if you planned this as part of your career, was to be a podcast host. And
not intentional either.
I stumbled into that. So we have that in common, but it's good fun.
Yeah. Well, again, we're thrilled to have you here, Oscar. And again, it's a personal favorite to me that you're here. So I really appreciate that. And I'm grateful for your time. Just to let everybody else know, Oscar's also guest lecturing today, doing Finance 360. And so he commits a lot of time, effort, and energy to GW. One thing that I want to also mention at the top of the show, which is we have this connection, BlackRock for Universities, with BlackRock and the GW Investment Institute, and specifically around our classes. And so you were instrumental and really our champion at BlackRock to make this happen. And I think we were like the number 8th school, who's counting, in the country to get this done with your help. So maybe talk a little bit about that and how this program works. And again, we're huge beneficiaries over the last few years for this and thankful to you. But maybe describe it for our listeners. What does that look like?
And GW was definitely an early adopter of BlackRock for Universities. And what does that mean? It means that we recognize that a lot of schools like GW have educational programs or curriculum that you lead, where students are learning about the markets and they're learning about how to evaluate companies and pick stocks. And then they assemble portfolios. And in this case, obviously the GW Investment Institute runs like real money that is part of the university endowment. What we recognized at BlackRock was that we can help students understand the next step, which is how do you put these stocks together? What does portfolio construction look like? What does it mean when you put 20 or 30 or 40 stocks together and look at it through the lens of risk that we do at BlackRock? And what kind of factor exposure do you have? What sort of style exposures? And BlackRock, the language of portfolio management isn't just selecting the securities, but it's how you assemble them. So we have partnered with a lot of universities around the country. Again, GW was an early adopter.
Thank you.
I spoke to you about it. I said, what if we brought this technology into the classroom and make it an added tool that students can use to understand their portfolios? And I think we're now over 3 years running.
Absolutely.
And you have the stats of how many students have benefited from this. I think it's well over 100.
It's over 100 now. Absolutely. Yeah. So these are smaller classes. And so it's 20 at a time for these classes. But we're over 100 right now, students that have benefited from this. As you said, one of the things that I think it is a highlight for students is, they get to use, Bloomberg and FactSet. And now this is an additional tool that is an industry standard, and they get access to people from BlackRock. Just add on that we hear directly from some of the people that work there and run some of the classes for us and really help people understand how BlackRock thinks about risk and analytics and how we can use this tool, Aladdin. So we're super thrilled to be doing that. And we're, again, grateful for that. While we're here, let's just talk a little bit at the future of work. And so many of our students who are just starting out, they're using these tools. What do you think is happening? How's BlackRock thinking about this? So students transitioning, they have the BlackRock for Universities program. What does it look like for them if they go to work for BlackRock or your peers? What's the culture look like right now in finance?
Yeah. Well, I think the culture can vary a lot. I mean, you could be at a hedge fund that's very small. You could be at an asset manager like BlackRock that, is over, almost 25,000 employees.
That's a lot.
But I do think that, there was like the pre-COVID period where it was sort of like you go to the office, you go somewhere and you physically sit somewhere. And then COVID happened and that couldn't happen at all, right? You were home. So now that we've kind of sort of normalized and now we're, 5+ years since COVID happened, 6 years since COVID really kicked off.
It seems like yesterday and forever ago.
But exactly. And now I think that as things have normalized, I think there's a tendency for big financial firms to say, we want you in the office. And I think they've, for the most part, recognized that people do want some flexibility. But that pendulum definitely swung back to, we want to have you in the office, not because it's a monitoring thing. Frankly, it's just building relationships. It's building collegiality. It's teamwork. It's innovation happens when you're around people and you're collaborating. And I think it's hard to do that when people are in like very, different isolated manners. So, and I get the sense that people are responsive to that and they sort of want to be around other folks. So I think we found sort of the right happy medium.
Nice. One follow-up on that. Could you maybe talk about the importance, especially for, students who are just graduating and starting a job, the importance of actually being in the office and being next to coworkers?
Yeah, I mean, you're trying to build a brand and reputation. Like nobody knows you. You have a great academic career, and that's what got you the seat at that firm. But now you're starting with a new blank sheet of paper, which is, who is this person? Like, what is their attention to detail? What is their level of hustle?
Yeah,
that's a word I like to use, right? Like how much are they willing to kind of grind away? So I think you need to build relationships. People want to see just how eager you are to be there, what kind of questions you ask. So I think it's incredibly important. Like you want to be there and be kind of, in the action.
Right.
And it's also, it's hard to explain this, folks who are just starting off, but you and I have probably lived this where, this is how kind of like encounters happen. This is like the people you run into in the hallways, the person that, connects you to somebody else. And this is where you start to develop relationships. And those relationships pay off over time. It could be somebody who ends up being your next boss.
Correct.
It's somebody who refers you for a future role. So I just think you have to be there. You have to, again, you're building a brand and reputation, and doing it in person, I think, is going to be better than doing it from the other side of a screen.
Well, thanks. And I think that's important for lots of people, especially, people coming out of GW and coming out of undergrad. You're trying to increase the surface area for opportunity and luck. And I think being in person is a big part of that. So thanks for mentioning that. All right, moving on a little bit now to the equity markets. So a huge topic that everybody has been in love with is the Mag 7. And for the Investment Institute, we own all of these names, actually. But for this year, performance-wise, they haven't done quite as well. But one of the things that has been in the news, in addition to the performance, is the CapEx budgets. And a lot of that's around AI. Any feedback from you around what do you think about the CapEx? What do you think about the performance? And then we can have a little follow up on that as well.
Yeah, well, the Mag 7, that they've earned that name. There was I read a statistic that if you look at the U.S. equity market over the last 75 years, going back to 1950, real EPS growth, right? So earnings adjusted for inflation has over a long period of time averaged about 2.5% of annualized growth. But in the last decade, that number was 7.5%. So quite a
big delta
difference,
there. Yeah.
Big delta, right? But the majority of that was driven by a handful of companies. And so the amount of innovation that has gone on in the Mag 7, and therefore the reason you have, we used to talk about when will Apple hit $1 trillion in market cap? And now, we're well past that. We have multiple companies that now in some cases are in excess of $2 trillion in market cap. So that's the good news, is we saw a lot of innovation that powered the market forward. These companies are cash rich.
Yes.
They generate a ton of free cash flow. And so they can afford the CapEx that we've seen. And we think that's going to continue, right? This is something that, by the way, has a good benefit to a lot of the other companies in the S&P 500. Like we talk about the Mag 7, but there's 493 other companies. And now the discussion is not just about the Mag 7, but all that spending they're doing, that's somebody else's revenue and earnings.
Exactly.
There are other companies that are the beneficiary of that. And all of this innovation in AI is also then, there's a lot of companies that are thinking about how do we use AI to become more efficient, more productive, grow our earnings. And so what started as a Mag 7 story and has helped the S&P and markets trend higher now is broadening out.
Yeah.
And I think now if you're investing in US equities, now you can own the Mag 7, but you should be looking at what's going on in those other 493. That's the more interesting opportunity.
Excellent. And a follow-up on that is, okay, a couple of themes that people are talking about. Obviously, we mentioned the AI piece. And you talked about some maybe derivative plays or plays off of that. Could you maybe talk about, what opportunities is the AI, world beyond the Mag 7? And there are ways in that 493 to think about how these companies would benefit from that and how, somebody might position themselves.
Yeah. So I think, maybe a couple of things on AI, which is, there is understandably always skepticism when you see euphoria around a certain theme or a certain topic, and people start to say, is AI a bubble? And look, I think the real bottlenecks to AI are not on the demand side.
Mm-hmm.
There's a ton of demand to incorporate AI into businesses, and that creates demand for, chips and infrastructure. The bottlenecks are more on the supply side, right? It's hard, the materials to build all of this infrastructure, the labor required to build this infrastructure, the power and energy that is needed to power the data center that is required for AI. That is more the bottleneck. So it's not a demand bottleneck story. It's more of a supply bottleneck story. But then, maybe more directly to your question, when people think about AI, they think about sort of the chips companies and the companies that have been responsible for developing large language models. But now this next phase, and maybe to reiterate, is how is the 350th largest company in the S&P that is not an AI company, but is starting to use AI to think about how to do things more efficiently, and that could lead to higher earnings.
Of course.
And like in BlackRock, like that's something that we get asked a lot as somebody in BlackRock is, senior management going, how are you using AI in your day-to-day? How are you going to be able to do more with the same amount of resources? So that kind of diffusion story maybe, and how are companies that are not quote unquote AI companies, but are using it in their business processes going to grow earnings? And there was again, I like statistics and like numbers that catch my attention, but I think it was in the fourth quarter of last year, 54% of companies in their S&P earnings transcripts talked about how they were using AI and exploring with it and figuring out ways to utilize it. Only 1% said it was having a meaningful impact on earnings.
Interesting.
And to me, the important observation is that 1% number is going to go up.
Yeah.
Right? Companies are still in the early kind of experimentation stages with it, but more companies are going to discover how it's additive to earnings.
Excellent. Thank you. Moving on a little bit to another topic here. So we talk about, ETFs. So obviously it's a big business within BlackRock, and many clients want to have an ETF maybe for everything. Can you talk a little bit about, active, passive, how, you're approaching this and maybe what clients are thinking around this?
Yeah. So I think one of the big shifts, and maybe some people are, have crossed this Rubicon already and some are coming, is that for many years, if you said ETF, you said, oh, that means an index.
Right.
Right. And that's understandable because for, much of the past 20 years, up until the last few, for much of the past 20 plus years, if you were talking about ETFs, you were talking about a way to access the market in an index or passive manner. You were just owning the index, and that there were a lot of indices to choose from. But so now the difference is that, the ETF is not just around to wrap an index.
Right.
Now it can also be where you take an active manager and put them in an exchange traded fund. There are, examples of a lot of innovation going on in ETF, well beyond just owning the S&P 500. So, if you look at BlackRock, like our ETF lineup includes both index and active.
Yeah.
In active, it's equities, it's fixed income, it's like alternatives, right? Which is a kind of a broad term for lot of different things. But so I think one of the shifts is that the exchange traded fund is now, people are realizing, okay, it's a wrapper. The mutual fund is a wrapper. Exchange traded fund is just another wrapper, and you can put a lot of different things in it. So to me, that's the big pivot over the last couple of years. And you mentioned I work in fundamental equities, and what does that mean? Like that's the part of BlackRock where we have stock pickers,
right?
And we have people kind of looking at the market, looking at companies, talking to company managements, doing the kind of analysis that you teach in your classrooms, right? And then thinking, which companies do I want to buy? And then when we package those portfolios together, we have mutual funds, but a lot of the new stuff is now being wrapped in an ETF because that's what clients want. They're comfortable with that wrapper. They like the way it trades on the market. They like the liquidity it provides. And there's also, maybe less obvious, but if you're a financial advisor and you have clients in ETFs from the times of using them to get access into indices,
right?
Now when you incorporate the active managers, it's sort of nice to have to show your client, hey, we're using ETFs for all of this. There's a bit of consistency. Like, the financial advisor, that intermediary that's helping the end client, likes to have some consistency in how they're wrapping the different investments.
It gives them further options and can be, not always, but can be more tax efficient for the underlying client if they're taxable.
That's right. And I think the all else equal, an active manager in a mutual fund and an active manager in an ETF, there's a lot of it depends, but in an ETF, you generally are going to be able to be more tax efficient than you were in a mutual fund. All else equal, an index ETF could potentially be more tax efficient than all of those options. But there's an interesting opportunity now to be active in something like the U.S. market, where we just talked about AI is a disruptor, and it's causing that 350th or 490th largest company in the S&P to be really interesting. The active manager can identify that in a more sizable way than just owning the index.
Absolutely. Thanks for that. Now, moving on to the next topic here. This is near and dear to both of our hearts, which is the art of podcasting. So I'm thrilled. This is the first time I've hosted another podcast host on the podcast. So welcome again to this part of it here. So a couple of things here. So when you talk about finance on your podcast, The Bid, and I listen to a lot of the episodes, and you do great episodes. You've even taken the show on the road, which is a ton of fun. Thanks for doing that. But one of the things that I think people benefit from is this level of transparency. So, for my listening to your podcast, you do your best to break things down and not use, it's not so much jargon, and you're not really trying to talk over people's head. You're really trying to say, hey, this is a topic, this is a way to understand it. And you do a great job about doing that. Maybe talk about the philosophy or approach to helping create that transparency on your podcast.
Yeah, you mentioned the word jargon, and I think you and I understand the jargon, right? Maybe a lot of the people who watch watch the podcast, listen to the podcast, understand the jargon. People in the business school might understand the jargon, but when I think about the podcast and the reach, the big issue right now, and Larry Fink, our CEO, talks about this, is bringing more people into the capital markets, like getting more people to invest. That the access to capital markets has never been as good as it is today.
Yeah.
Like, you can buy an ETF for a lot of different asset classes, right? The amounts you need are small. There's daily liquidity. So the access is there, right? And we need to get more people invested in capital markets, so they save for retirement, and they take advantage of some of the innovation that's going on in the economy. But how do they do that? Okay, even if they agree they have the access, it's very easy for them to say, but I don't get it. Finances can be complicated, right? And we use a lot of jargon. And when you don't understand something and it seems complicated, you probably don't want to jump in.
Right.
So I view the podcast, and maybe you think about it this way too, which is, let's make this a topic and a space where we break things down. We try and keep it approachable, right? We're not trying to talk over people's heads, but we're trying to make the content something that creates curiosity to want to learn more. And then, okay, maybe I want to invest in that.
Right.
So, I was listening to a different podcast last night on the train ride down to DC, and it was around Bitcoin, and it was somebody who I know knows a lot around Bitcoin and crypto. And my thought was, I'm going to spend the next 40 minutes listening to something, and I don't understand a lot of the terminology, and it's going to make me kind of confused. And it was not that.
Nice.
It was a very approachable discussion around, this person who's invested in it for many years, his view of how it's evolved, where he thinks it's going, why he thinks it's important. And it was like easy to understand. And the truth is, it got me more interested in wanting to learn more. So that's, I think, what is like our obligation in financial services or any sort of finance related podcast is, let's try and bring more people into this topic, because we need more people investing in the market.
Well, it also makes you a great teacher. And sticking with that theme a little bit on the podcast here is signal versus noise. How do you decide, the things that you want to talk about?
Yeah. Well, I think some of that is dictated by like what's going on in the market. So we've had geopolitical headlines over the past month. So, we got to talk about geopolitics, or AI is revolutionizing the economy. We have to talk about AI. I think for us at BlackRock, there are like some big picture themes that are recurring. Mm-hmm. Things like retirement, things like what's going on in the markets, things like AI, things like geopolitics. You mentioned sometimes we take the show on the road, but even when we do that and we do our sort of live recordings and in front of clients, we still stick to a couple of these major themes. So I think part of it is having a good sense for what is like the brand of your podcast, what is really the goal and the mission. And again, I think of The Bid as something that is trying to sort of demystify markets and bring more people closer to financial markets, get them more interested in investing. And when you have that sort of guiding principle, you can focus on what are the key topics that you think are going to bring people in. And therefore we avoid doing, an episode about something very random.
Right. Perfect. All right. So now we're going to move to wrap here. And so we're moving into the lightning round.
Okay.
Thanks. And I hope you're up for this. All right. So, 3 quick questions. Love to get your take on this. So first up, one asset class that you think is currently overlooked.
Well, it's more of a sector. I think
Sure.
we talk a lot about like technology and AI, and but I think like healthcare is a sector. Not so long ago we talked about how the world's getting older. It's
Right.
just the truth, right? The demographics of the U.S., of China, Japan, a lot of the developed world.
Absolutely.
Right? There are some exceptions to this in the emerging markets, but the world's getting older, and I think healthcare as a sector has been a real laggard. But
Right.
you're starting to see more earnings upgrades there. It's attractively valued. So I think that's a sector we haven't talked about in a while, but that would be the one I think is overlooked.
Thank you. Next up here is, this fits into part of the conversation around podcasting, is an overused financial term. And how would you better explain it?
So look, we talk about volatility all the time. I've been in markets for 25 years, and
Especially
and even
now.
when we had low volatility
Right.
for much of the post kind of global financial crisis period, maybe not in those early years, but
Yeah.
we went through a period of very low volatility. Rates were low, like there was actually low inflation. But even when we had low volatility, we talked about there's volatility in the markets, and the reason it's not like we're going to eliminate it from the jargon. But it goes back to when people hear about volatility, it scares them from taking action in their
Right.
portfolio. And so volatility is the price you pay to earn returns in the capital markets. It's a fact. It's going to happen. There's nothing unusual about it. It would be unusual if it were zero. We've seen volatility this year, but markets have still trended higher and have, so I just think that that's a term that we use. It can get overused. And what I worry about is that when we use it too much, it scares people away when it actually should be inviting people in.
Great. Thank you. Last question. One piece of advice or some advice for a graduating GW student. Now, it could be any student, but somebody that's just starting out their career and they're trying to work in financial services. What advice could you give them?
I'm not going to give them the obvious one, which is like learn AI and bring that superpower to your new firm. I'm going to give something that maybe is a little less obvious, but you've heard me say this in some of the student settings that I've been here for, is just develop a reputation as somebody that people want to work with.
Yeah.
Right. I mean, I think a lot of your academic career, of course you have team projects and group projects, but a lot of your academic career is like you trying to get the best grade for yourself. You're not like trying to help everybody else get a good grade. You're trying to help yourself get a good grade. When you move into the corporate world, the vast majority of it, you're in team setting. You're not going to solve everything unilaterally, right? You're going to solve something as part of a group. And so people will invite you into that group if they want to work with you. And if you have that reputation as somebody that, is flexible and versatile and open-minded. So it's really more of like a mindset thing, and think about how you show up in the workplace. Of course, you need to learn AI, but be that person that says like, I want to work with Rodney on that. He's a good guy to work with. He's open-minded. He's smart, but also he's coachable.
Right. Willing to help, moving much more from individual to team sport.
That's right.
Absolutely. Well, I think that's great advice and a great place to end here. Thank you, Mr. Pulido. Again, it was my honor for you to be on the show. Great. Always fun to hear what you're doing on the bid. Congratulations on all the success of the bid, and certainly your career at BlackRock. And thanks for being such a fantastic alum and helping us connect BlackRock for universities to GW and the GW Investment Institute. Thank you very much.
Thanks for having me. I'm glad we finally pulled this off.
Excellent. That's a wrap for this episode of Market News with Rodney Lake. Special thanks again to Mr. Oscar Pulido. See you back on the next episode. Disclaimer, the content shared in the GW Investment Institute podcast is for informational and educational purposes only and should not be considered investment advice. The opinions expressed in this podcast are those of the host and guest and do not necessarily reflect the views of the GW Investment Institute or the George Washington University. Listeners should not act upon the information provided without seeking professional advice from a qualified financial advisor. Investing involves risks, including the loss of principal. The GW Investment Institute, the George Washington University, and the podcast hosts do not assume any responsibility for any investment decisions made based on the content of this podcast. Always conduct your own research and consult with a financial advisor before making any investment decisions.